Just a very quick introduction update of Magallanes, who we are for those people who don't know as yet. Very quickly, we are equity long-only asset management company with we are value investors. We follow value investing philosophy. We manage 3 different strategies: Magallanes European equity and Iberian equity. These are our bigger strategies by far. Also, we manage microcap strategy, microcaps Europe. It's a very tiny fund that aims to invest in tiny companies, in micro companies. Indeed, this fund is not very far from being close to investors, as it has reached capacity constraints. We are independent as a management company. It means a lot, as we are able to implement those ideas we firmly believe in regarding value investing. The company is managed and controlled by its founding partners, Blanca Hernandez, Monica De Croo, and myself. Since we started, since we launched the management company a bit more than 3 years ago, 2014. We will co-invest in the funds where our investors also invest with us. It's paramount for us, it's very important. It's a full alignment of interest. Indeed, key people in the organization is in some way obligates more than encouraged to invest within these funds according to our code of ethics. It's an important characteristic of us. Assets under management are roughly speaking 2 billion euros, and most of it has to do with our biggest strategies, as I mentioned before, the European fund, 1.2, 1.3 billion assets under management belongs to the European strategy, the Iberian, and then the microcaps. It goes without saying that people in Magallanes, our main competitive advantage is our intangible assets. Without the people,
and all of this with a long-term record, both managing European and Iberian equities. Here you have a sample of our track record so far these 3 years, a bit more than 3 years. Just to remark, just to stress that we have been able to fulfill our first commitment with our clients, protect capital, and the second is to make it greater, to make it more profitable, to make it bigger, to grow, to protect and to grow capital. Here you have the performance in both the Iberian and in the European. Having said this, let's go with the most important thing of the presentation, the idea I'm going to present. It has to do with, not with cows, not with grass, it has to do with cheese, not any kind of cheese, it's a special one. In my humble opinion, it's one of the best one, probably the best one, cheese. Caprice de Dieu, apologies for my French pronunciation, although I will have to say also apologies for my English pronunciation. Apologies anyway. Caprice de Dieu, I would guess that it doesn't need any kind of presentation, but just in case is #1 cream cheese producer in the world, absolute very renowned brand in this kind of cheese, very remarkable brand, premium brand. I would say most of the people know about this cheese, but few people, I would guess, know which kind of company is behind Caprice de Dieu. Savencia, fromage and dairy, again, apologies for my pronunciation. This is the company, the family-owned French company behind Caprice de Dieu, and a wider range of cheese premium brands. Savencia is the world's first cheese specialty producer. It focuses in cheese specialties with high value added dairy products and ingredients. They don't just produce cheese, but other kind of derivatives from milk, dairy products and specialties, ingredients, even special foods for baby foods, baby powder food, food for infant animals, ingredients for professional confectionery industry. They have a very wide range of dairy products with value added, some of them. They basically take milk and elaborate to produce, to deliver high branded dairy products, especially with a specialty in cheese. Talking about size, how representative this company is in the world, in the competitive world of dairy products. We are talking about a 19,000 employees company worldwide with a remarkable network that has presence in more than 120 countries. It's remarkable because the company is tiny, totally or partially, as far as I can guess, unknown, but it has a presence very similar to the like of Danone or Nestle, for instance. Having presence in 120 companies is I would say, an important competitive, in some way, edge of advantage. Among the world's leading milk processors, number 2 cheese producer in France, just behind the giant, mega giant cheese producer Lactalis, is the second biggest in the world. And number 4 worldwide. Let's say you have some of the metrics. Is a close to 5 billion turnover company, dairy company. To have you an idea where Savencia is positioned within the spectrum, within the industry, it catches my attention, or it caught our attention when we first discovered Savencia, and I have to say we discovered Savencia, I must confess, by accident, while shopping in the supermarket. I'm a deep lover of any kind of cheese, and here they have a very renowned brand, Burgo de Arias. Spanish people, for sure, they know Burgo de Arias, and that was the starting point of the discovery journey of Savencia. So, what really is strange is that in the industry is very well known. The right side table is a rank of the top 20 largest dairy processors in the world. As you can imagine, top 10, in the top 10 we have Nestle, Lactalis, Danone, Dairy Farmers, Fonterra in New Zealand. But number 19 is Savencia. 5 billion turnover company within an industry dominated by the big ones we have in our main. Total turnover of, to give you some data to compare, because it's very shocking. Total turnover of, for instance, Danone in the dairy business is 15 billions turnover. Sales of Savencia, as I mentioned before, is 5 billion. Roughly speaking, is 1/3. When it comes to financial markets, to the investment community, the market cap of Savencia is 1.1 billion euros. The market cap of Danone, needless to say, is, I don't remember, 40, 50 billion. So there is a mismatch between awareness in the industry, their position in the industry as market leader, but totally unknown, totally overlooked in the investment community, which, by the way, is a good thing for the kind of investors we are. As I mentioned before with the introduction, Caprice de Dieu, Savencia has a wide portfolio of iconic and premium brands in the world. Its strategy has to do with being absolute market leader. Otherwise, they don't have any interest in being in any country they would compete in. Once they decide which country they would like to compete, they choose the category in cheese and try to be number 1. Otherwise, it's useless to spend money in R&D advertising to compete, because there is no room in between their own, renowned premium brand and the white label. There is no room in between for second or third. Think about Coca-Cola. There is no room for even for a second brand, even for white label brand. It's Coca-Cola and that's it. Okay. Same strategy works here. To have you an idea of how representative, how renowned the bunch of brands they have, this is a short example of the powerful brands they have. First is Savencia, Caprice de Dieu, #1 cream cheese in the world. To give you an idea, 2 packs of Caprice de Dieu is sold every second. It's quite a bit. It's quite a bit. Coca-Cola sells, as far as I can remember, 12,000 per second. It's far. Obviously, it's very far, but to have an idea in mind. So it's the best-selling by far cream cheese product in the world. The same strategy as I mentioned before, in every country they decide to compete in, the strategy is to have absolute market leader, top brand, renowned brand. For instance, in Latin America, they operate with, again, my pronunciation here, Polenghi. Polenghi is #1 fresh cheese in Brazil, major player in Argentina, in Uruguay, for instance. In Spain, Burgo de Arias, needless to be presented for Spanish consumer. Since I was a child, I always remember this kind of cheese. That's the reason I ran into Savencia several years ago. French cheese, again the strategy. We are talking about cheese freeze, but totally different tastes. Cheese, fresh cheese in Brazil doesn't have anything to do in terms of tastes, of course, with the fresh cheese, with the taste Spaniards have here in Spain. This is an important competitive edge of Savencia. They offer the kind of product, but they innovate. We will see further, this is an important competitive advantage. They innovate to twist, to improve or to modify the final taste to, how to say this, fulfill the real taste of consumers in every country. An important valuable detail of Savencia. Germany, #1 cheese producer, cheese delivered with Geramont or Gramont. Central Eastern Europe, absolute market leader, Ukraine, Hungary, Bulgaria, and rest of the countries with very renowned brands, Milka now, Medbe. More brands, there are tons of brands, but I selected what I thought were the most representative, but there are dozens of premium brands. Major players in Western Europe with Saint-Maurice, Tartas, Sanabria or Sanagur, to name a few of them. But Savencia, as I thought before, as I mentioned before, they don't just produce cheese, they also have another differentiated business unit that has to do with ingredients, specialty dairy products. For instance, they are absolute market leaders producing and providing special butter for confectionery professional industry to produce any kind of sweets, croissants, for instance. They are owners of Cormand. This is the #1 professional butter brand. Also in this category, you will find Elevier. So, #1 absolute reference in professional liquid cream, also for the confectionery industry. Another kind of different products they offer under the dairy specialty ingredients business unit is Modilac, is among top selling powder milk for baby alimentation, for baby food. Okay. So, Caprice de Dieu, all started with Caprice de Dieu. Jean-Paul Bongrain invented literally 60 years ago Caprice de Dieu. He is indeed the founder of Savencia. Savencia started with Caprice de Dieu in 1856. At that moment in time, it was really innovative, because he invented, from the taste of the cream cheese, he revolutioned, he introduced a big change in the way cream cheese was in terms of, it's difficult to explain in English, but the taste, the surface, the color, smelling, but also he innovated in the packaging, in marketing. Indeed, he invented this oval shape to differentiate from the rest. Think about cheese. You are thinking about a circle shape packaging of any kind of cheese. He thought, how can I differentiate physically for the rest of the cheese among the rest of cheese that there is in a retailer? Let's produce an oval-shaped cheese with a blue color. So it is more than an anecdote because it has to do with the innovative gene is embedded in the DNA of Savencia. Innovation. That's the reason they are able to charge extra prices, not just because of the premium, the power of brands, but because of innovation. It allows them to charge extra prices, innovation. Savencia is listed in Euronext Paris, and it has done so far these last 11 years, nothing. But by the way, it's a good thing for the kind of investors we are. We like this kind of profile of behavior of the price of the stock. Totally overlooked, no interest for the investment community. We are willing to invest in this kind of companies. Nothing done in more than a decade, but results have almost doubled. Two-thirds of the company is owned by second generation, the sons of Mr. Jean-Paul Bongrain. They control, family control, two-thirds of the company. I think it's worth mentioning that although they are of course in the board, they are not in the daily management team. They are not part of the how to say this, of the management team. They have a professional non-family-related chief executive officer, CFO, and COO. So I think it's worth taking this into consideration. Taking into account the stake for employees, treasury stock, free float of the company is less than 30%. Probably it's one of the reasons we will see further risks of the company being trading so cheap. In this, it's cheap under all range of metrics. Here you have the breakdown of the largest shareholders. Here we are with 3.5% of the company, so we have a little bit more than skin in the game with Savencia. We know about what we are talking about. We have a firm commitment with the company. Metrics. I have to confess that we check it and check it again and again, but it's what you have here and has to do with sales already reported last year. This is not forward, this is not forecast, this is what it is. And nowadays that, to say it in a polite way, market valuations are demanding. It's not usual looking these kind of metrics, you name it, no matter the kind of metrics you decide to look at, it's trading cheap. It's objective. We can talk about future strategy and so on, but metric-wise, it is cheap. There is nothing outside balance sheet. We check it. It's trading very cheap, priced below book, 11 times earnings. We are very old-fashioned in Magallanes, and we pay much attention to traditional metrics. It seems that price to earning has been forgotten. Everyone is talking about EBITDA, cash flow is important, but also earnings for us is very important. It seems a metric for the last century, but it's possible to see companies trading at 11 times earnings. Savencia is a good example of this. EV/EBITDA 5 times. We are considering, excuse me, is a market cap, I mentioned before, 1.1 billion company, net debt 500 million. A disclaimer here, because in our opinion, debt, although it's not worrisome at all, is less than 2 times net debt EBITDA. It's not a worry, it's not a concern debt, but we have to explain that debt is overstated. They bought, the very last of last year in December, they bought a company in Russia, and they increased temporary debt to buy this company, but they didn't consolidate the proportion of revenues, cash flow, and EBITDA. So it's temporarily overstated. For sure, across the year, as this exercise goes on, the debt is going to reduce. But anyway, we have been conservative at including all the debt at the end of the year. EV/EBIT 9 times, 56% of sales, EBIT margin 4%. Is a low margin kind of business, but any company competing in this industry, think about Fromagerie Bell. Fromagerie Bell, probably you are also familiar with, is the producer of the Laughing Co, it's called in English, the Laughing Co and Baby Bell. Same kind of margins. Amy, the Swiss dairy products producer, we used to have, we bought Amy, not anymore, we sold it. Amy has the same kind of margins, a tiny margin kind of business. But what really matters is a return on capital employed. It's about 8%. Not usual to see this kind of returns on capital employed in this stable business. Free cash flow yield 8.5%, and this dividend yield. So cheap, no matter which kind of metrics you decided to pick. Well, as we understand the business, we have described the 4 main pillars where the success of the business is based on. First, we talk a lot about this, premium brands. Premium brands gives you pricing power, that's simple, it's what it is. Industrial expertise, it's very important. I think it's the most important. 5 minutes. Okay, let's with evaluation. Okay, industrial expertise is very important to have to secure your source of raw material, milk. They have a long-term relationship with farmers, more than 12,000 farm producers with long-term partnership contracts that guarantee them the availability of milk. No matter how important is your brand, no matter how good you are producing cheese, if you don't have milk, your business is worth 0. Important competitive advantage they have when it comes to providing raw material. Innovation, we talk about innovation, about butter, about baby food, about liquid cheese, Elbeer, business. This is an international company, although it's based in France. Less than 20% of operating earnings come from France. We mentioned before, presence in more than 120 countries. The second best sales team in terms of quality in France, after Danone. It's worth something. And the power of the distribution network. Needless to say, no matter how good is your product, if you are not able to put this product for the consumer to be consumed, your product is worth 0. It's a very important distribution network. At a glance, but an ultra-quick glance, the milk market is a commoditized market. There's no difference among any kind of milk. It's a very commoditized, price-driven market. Leaders are EU in terms of production, US, Australia, consumers, Russia and China, emerging markets. This is it suffers from time to time. It's very well-balanced supply and demand market, but it suffers from time to time imbalances that has a terrible effect in terms of prices and production. To wrap up this slide, it means that there is temporary short-term shocks that immediately, very quickly and very sharp is adjusted in prices. For instance, you have the crisis with the Russia embargo 2-3 years ago. China is loud, and you remember the commodity crisis, and the lifting of the EU quotas. It literally flooded the industry with milk. It provoked, oversupply. Immediate reaction was prices gone down of every kind of dairy products, and the reaction was adjusting production. It's a self-quick, balanced market. How this affects to Savencia? In terms of turnover, they are not immune, of course. The price of milk goes up, revenues goes up, price of milk goes down, they translate some of this drop to sales. They are not immune in terms of turnover. The point is not here. The point is that they are able to translate volatile market in terms of revenue to a stable gross margin. That is what really matters. The power of brands allows them to pass through risk volatility. I will say that this is the most important slide. The power of brands give the most powerful competitive advantage, being able to translate volatility in raw material. That's the reason they have a pretty much stable gross margin. Two different kind of businesses. Fromage that produces cheese, dairy produces specialties, cream, and so on. Different margin profiles. They've started, although this is a very low operating margin business, they started in 2015 a profitability improvement program that has to do basically with centralizing of the organization, reducing headcounts, centralizing R&D that can save costs and improve eventually margins. Once you realize that there are two differentiated business units, you can have the tools to value separately the two different business units, put together and have a total valuation of the company. Fromage, cheese is a mature, low, steady growth business, very predictable, high margins, around 6%, low grower. Dairy and ingredients is high grower, close to 10% annual compound, most of it organically. I think it's remarkable. It's cheese, it's not rocket science. It's cheese and dairy products. But lower margin. But there is a lot of room to improve here, a lot of to be done in terms of profitability. Once you have identified these two different things, you compare with peers. It's difficult to find pure peers. There is a closest peers to Savencia in the cheese business unit is Fromagerie Belle, the Laughing Cow, and is trading by any metric well above. Then in dairy products you have from Amy to Odin Food, again trading well above. Once you, we have put just as a reference the non-Nestlé, but that's very far from Savencia valuation. We work with three scenarios. The base case is cheese products remain the same profitability, but they are able to improve profitability in the dairy specialty business unit to peers levels. It would end up with upside potential of 80%. A blue sky scenario, best case scenario is both the business units improve their profitability to its closest peers, more than double, 200 euros per share, and a covenant scenario is the scenario we are working with. You don't have to do nothing, but times keeps on going. You are cheap, just you have to converge with your peers, no profitability, or the same profitability in both businesses, and you will end it up with 100 euros per share. So, 2 minutes and I finish. Risks, low liquidity, reasons why this company is doing so cheap. Risks, well, I understand. It's a 1.1 billion market cap dairy product company, but daily turnover, daily rotation turnover, it's not that small. It's 300,000 euros daily average trading volume. Being minority shareholder, having the status of being minority shareholders. Milk price volatility, forex risks. They operate in 120 countries. And the execution risk, but as we saw before, even in a worst case scenario, you have some upside in your valuation. Summary and I finish. You have the opportunity to buy an iconic and worldwide premium brands company. It's a very simple to understand, very easy to understand business, as I mentioned before. It's not rocket science, very simple. They sell cheese and that's it. Totally overlook. Global distribution network, it must be worth something, 120 countries. They have 70, as far as I can remember, 76 facilities worldwide. Family owned, it's cheap by under any metrics, loaded, totally overlooked in our opinion. 3 sell-side analysts used to cover, 1 dropped 2 years ago, and the 2 remaining are local sell-side analysts with a so-so coverage of the company. For us, it's a very good thing. The trends are very favorable in terms of cheap consumption for the emerging markets and upside potential even in a worst-case scenario. Thank you.
Thank you. Thank you. Now we have a little bit of time for questions. Any questions, please?
This is the pack. I forgot. This is the present.
Good morning. Could you tell us, I presume, having grown to a global business, that they've acquired quite a lot of companies over the years. So I'm assuming, I don't know, that past cash flow has been spent on acquisitions. Could you tell us about what they'll do with future cash flow and whether it's different from what they've done with past cash flow?
Yeah, very interesting question. Thank you. Yeah, most of it, as is, you are right. As is a very mature market, most of the cash flow generated is a high generating cash flow, as we saw before, is deployed to buy to growth inorganically. In terms of cheese, not in terms of dairy products. In dairy products, they are investing their own. They are doing their own innovation. At a big chunk of R&D expenses, that it quite a big for Savencia, more than 5% is deployed to invest in the most promising growing business unit, is ingredients and dairy products. But yeah, you're right. Cheese is mature. Grow has to do with buying other brand, as there was an acquisition last year, a renowned brand in Russia. But a big part of a representative part of investing, of capex effort, it goes to the dairy business unit.
Hi, thanks for the presentation. Have you given much thought to how changing distribution, perhaps involving online distribution mechanisms of these types of consumer staples businesses, affect the value of the brand equity of these brands, which ultimately serve to lower consumer search costs?
Very interesting and challenging, very interesting question and challenging one. But the difference for this kind of branding products is that has to do with their food. So think about Coca-Cola. It's not that easy or common or usual for the final consumer to buy Coca-Cola online. It is not the same, of course. But when it comes to food and online, it's not clear the strategy. It's clear in non-food branded products, for sure. In shop and this kind of businesses, Henkel, for instance, they could eventually have a problem because profitability is under threat in the online. But when it comes to food, it's not clear yet.
It seems that Dean Food in the US is not performing very well. They're struggling with the milk, with Walmart putting a lot of pressure on their milk product. And if you look on the valuation perspective, Dean Food's trading at a 4% dividend yield and maybe 9x trading PE, and it's probably the same type of company in terms of it's a 1 billion market cap, but it's much more liquid. I was wondering, do you see the same happening maybe in Europe on the milk side, like a lot of pressure from white label?
No, very interesting indeed, and it happened in Europe 2 years ago when I mentioned it very quickly, but it's worth coming back to how Savencia coped with this high volatility market when the Russia embargo came and China's slowdown also came. They were able to cope with this tough situation, and you can see that in margins they were able to protect most of the effect on this spike in prices. Here you have the spike. in prices. This is what is making them foods suffering a lot. They are not able to translate to the final consumer most of the effect of this increase in prices. They weren't able. Savencia was able to do that because of the power of brands. Okay. So they have demonstrated that they have been able to do that. Okay. The worst thing for all these branded dairy producers is spikes in the price of milk. The best scenario is lateral nowhere movement of dairy raw material prices. That's the way they can do best. They can translate in a better way the final effect to final clients. But spikes, as we saw in 2014 to 2015, it can eventually hurt a lot to that company that are not able, as Dean Foods, to translate to final clients.
We have time for another question. 1 second.
Even looking into profitability, into margins, has management identified specific areas of self-help to cut costs or things to improve that margin?
Yes. As far as we have been talking to them, and they explained to us, has to do with getting a lean management, cutting headcounts, mid-range, I don't know how to say it, mid-range managers. They used to be, as a consequence of this strategy of buying or building up top brands in every country they have presence, they duplicate some activities, even general administration activities. It doesn't make any sense. They are reducing this overlapped central costs in every country they are. R&D, for instance, they used to be segregated. Right now they are centralizing the R&D effort in France. All these measures could eventually save around 50 basic points. It's quite a bit in a strange, in a tight margin kind of business. So these are the main measures. And they started in 2015. Next week we have a conference call with them to update on this. They are doing some progress. It takes time. But these are the measures.
Hey, Ivan, thanks for the idea. 3 points, please. The first one is you mentioned infant nutrition. So what portion of the business is infant nutrition and what is the margin and how is that business growing? The second point, how has the company historically bought back shares? And the third point is we've seen initially the share price chart has been fairly moving sideways. So do you expect any catalyst or any event that may change that given the low liquidity? Thank you.
Okay. The data and ingredients business unit, you have in this slide the main economics of it. It grows almost double the total revenues of the company. And most of it is, as I mentioned before, related with the question before, most of it is organically. They are developing its own innovation. They are innovating in products because it's the most value-added products. Examples of this is, as I mentioned before, baby food, for instance, or splitting out milk into proteins and whey, I think is the name in English, in Spanish is suero, whey, to produce it has applications, it has utility in the pharmaceutical business. This is a high profitable business unit, but it requires investing. The great effort is being doing here, it's growing, Marisan. I would say this business unit is temporary under-earning, but the potential is there. Catalysts in the price, I don't see any, honestly. I think we are buying a cheap stock with upside potential. We have the value. We don't know when the value is going to be unlocked, but we have plenty of time to wait for it. It's our way of doing things. So In the midterm could be this profitability improvement measures accelerate, for instance, as I mentioned before. These measures we have been talking happens earlier, any kind of these catalyzers, but honestly, we don't have any catalyzers. There was a third question. Share buybacks. No, they are not buying because they control the company, so buying more shares of the company. They used to do that, as far as I can remember, it was 6-7 years ago. They reduced capital and they increased even more their stake to 66%, but it could be an squeeze or reducing even more liquidity of the stock.
Okay, thank you.
Most of the cash flow is deployed to investing in the growing ingredients and dairy product business unit. Most of the cash flow is deployed to that, rather than buying stocks.
Hi, thank you for this one. It's quite interesting. I'd like to could you please share with us some color on Russia acquisition and in terms of margins, growth prospects, and leverage, and also in connection to leverage, wondering how was the leverage profile before the acquisition? Because
I think this in the appendix we have some more information. Sorry, because this is only to support, to give you some color. The leverage profile of Savencia has been so far these last 10 years between 1 to up to 1.5 times net debt EBITDA. So this is temporary, and it has to turn to these levels. And the acquisition, there is no further disclosure because it was closed in December last year. We are going to talk to them next week, and we will have more color. But as we can guess, they have spent, roughly speaking, around 80 million. Our guess, it makes sense. As we perform a matching of cash flows, we ended up with higher debt, and this higher debt is around 80 million, so it's been financed by debt with a short-term facility financial credit line. So we guess that if they paid around to 30% to 50% sales, they are acquiring a company with 50 million sales. It's our guess that I would say it makes a lot of sense. A 50-60 million sales company with probably 10 million EBITDA company. This is the company that is not already included in our calculation, but this is our guess, but we will know for sure next week.
Okay, thank you very much, Ivan.
Okay, thank you.